Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's episode, Anthony Power and I are pleased to welcome Jeff LaBerge back to the program. He's the head of capital markets and strategic initiatives at Bitdeer Technologies Group. They just came out with Q4 and full year earnings, and that's going to be the topic of discussion in today's presentation. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of Bitdeer, what you thought about their Q4 results, and your outlook for the remainder of 2025. Now, with that being said, let's get into today's interview. Okay, guys, that's right. Today's video, we have Jeff LaBerge, head of capital markets and strategic initiatives from Bitdeer Technologies Group, hot off the heels of Q4 full year earnings, and super excited to get into today's conversation.
Yeah, man, always great to be on. Thanks for having me.
Most definitely. So we started off with this question last night with Jason as well. Can you walk us through some of the Q4 results, some of the top line numbers, and the annual review here for Bitdeer?
Yeah, absolutely. So Q4 revenue came in right around $69 million. I think it was about 350 for the year. Adjusted EBITDA was down a little bit, negative $3.8 million versus just under 40 million for the year. Cash equivalents, we ended in a great liquidity position, about $475 million in cash, and then another 77 million in crypto balances. I'd also mention that due to IFRS accounting, the crypto balance is actually held at cost, so that does not reflect any mark-to-market adjustments in there.
That's great to hear. In terms of obviously the revenue there, you also showed a comparison for the previous quarter of the end of 2023, and obviously there's been a drop. Yes, we've had a halving. But can you just tell us a little bit more about, you break your businesses down into the four segments, the self-mining, the hosting, the membership, and the cloud hash rate. We see the self-mining, relatively stable there, but can you talk about some of those other areas in terms of how the revenues have gone over the past 12 months?
Yeah, absolutely. So, over the last 12 months, obviously, where we've seen the decline has really been in our hosting and our cloud hash rate. So, from the hosting standpoint, so what we saw is some of our general hosting contracts that started to expire, and sort of by design. We knew they were going to be expiring now, and we're in a much better position to now absorb that power back and take it back into our own self-mining fleet. So we were happy to have that back, and we'll start to fill that up in 2025. The remaining hosting is really going to be our membership hosting. And if you recall, those are our long-term contracts that were entered into many years ago when we were a private company. They're essentially, long-term contracts with customers that made a very nice upfront payment to us. And so we're going to continue to honor those contracts as long as those guys want to continue to mine. If they decide not to, obviously we'd be happy to take that power back as well. The biggest decline was really in our cloud hash rate business. So if you recall, our cloud hash rate is where we're actually leasing out or subscribing out our proprietary hash rate to customers on our website. Those were primarily contracts that were entered into back in, let's say, 2021. They were 3-year contracts. They held up great for us during the bear market. Those have started to roll off again. Again, the cloud hash rate is really more of a bull market product where demand for it is highest when sentiment for Bitcoin is the highest. So that's something we may look to start back up sort of later in this cycle. But for right now, again, that hash rate comes back into our self-mining fleet, and now we're using it to mine for our self-mining right now.
Yeah, in terms of the access to power, you clearly state you have 895 megawatts available currently with 1.7 gigawatts within the pipeline, of which an immense amount of that is coming on during this 2025 period. In terms of the 895, I'm calculating now with your hash rate at the moment, around about 80% of that's being utilized. So, I suppose, revenue's coming down, but it does provide you with a nice opportunity to start using that power for your own self-mining as these new A1, A2 seal miners, which we enjoy talking about on the podcast, start rolling off the production line. So can you sort of like tell us more about that opportunity that potentially, happens with the release of some of these power contracts that you've had?
Yeah, absolutely. So, 24 was really kind of a transformative year for us, transition year for us, trying to, getting past some of these past hosting contracts. Now we've got a significant amount of power in our portfolio right now that's ready to start mining for us. So we will certainly not be capacity constrained in 2025, and I think that's where a lot of our immediate growth is going to be able to come from. We're going to be able to plug in those A1 seal miners ending by the end of this quarter, and then we're going to start plugging the A2s in starting in Q2 and into Q3. So we're pretty excited about that, and we're going to see a lot of growth this year.
Awesome. Yeah, I mean it's all there in the update, and we'll have a link of that in the bottom of the podcast. In terms of the big items that were highlighted in the earnings report, there was a couple of standout ones there in terms of the convertible note and also the warrants with Tether. Can you sort of like give a brief explanation to those that aren't sure and familiar with how the accounting principles work around these two elements of the income statement?
Yeah, it's a very important thing to note. So because IFRS accounting requires you to essentially mark to market any type of derivative liability that you have on your balance sheet. So that would include things like convertible bonds, which, a convertible bond is essentially a bond with a call option attached to it. Okay, so that call option needs to be revalued every quarter, as well as the warrants that we have outstanding with Tether, 5 million warrants with Tether. So what happens is when your stock price goes up, the liability of that essentially increases, because now it becomes more like equity, essentially, because the likelihood of it converting, because it's so far in the money, goes up. IFRS requires you to mark that to market. Now it's a non-cash charge. It all gets settled out or netted out at settlement when the instrument is either exercised or expires. But it's a requirement that we have to kind of live with that GAAP filers don't. So because of that, we had about a $480 million non-cash, non-operating loss that hit our P&L. It gave us a pretty rough, bottom line headline number. So, I think that may have had to do with some of the volatility yesterday. But, again, it's non-cash and, non-operating, and it nets itself out once it all settles.
Yeah. Another part of, as well as the convertible note, which helped you raise, a single amount of money, you also had an at-the-market offering in place during the previous quarter there, and listening to your earnings call, you were able to utilize that in a really good way. The share price really took off, in the last few months of 2024, which meant you were able to offer, less shares to raise a significant amount of capital. I'm just looking at the share price, not just of Bitdeer, but of literally all the miners this week. And, Bryce and myself are in New York, and we're sort of like, we were hoping for like positive, green sights on some of the share prices. But looking at share price now, I mean, how will that impact the way that you decide going forward with regards to the ATM, having listened to what you had said on the earnings call?
Yeah, no, absolutely. So we had a nice slide in our earnings deck to kind of highlight this, or just our usage of the ATM. So, we feel like we've been very, responsible kind of stewards of capital for our shareholders. Since we've been a public company, we've taken dilution very seriously. So you can see in that slide, we really only started using the ATM in any meaningful way in the fourth quarter, when our stock price was up at much higher levels. We raised almost no money on it in the first 2 or 3 quarters. Obviously, in the fourth quarter, we took advantage of it. Our price was up at a level where we were comfortable raising equity at, and we certainly took advantage of that. We tapered that back a little bit in January, and certainly we're gonna, I would look for us to do what we've done in the past, with the stock price at its current level, which we hope is temporary.
Yeah. As raising capital is informative, we also want to understand more about the CapEx expenditure,
Sure.
how that's been utilised, during the end of last year, and actually what the plan is for 2025. In terms of, I mean, we know you've got a significant amount of cash balance on the balance sheet. You've got, about $77 million worth of crypto as a cost price there. Can you tell us a little bit more about the CapEx side moving forward?
Yeah, absolutely. So we gave some guidance on this during the call, and we gave also some guidance, kind of follow-up guidance from our last quarter. So last quarter, we mentioned that we had somewhere between 250 and $270 million of CapEx, infrastructure only CapEx, to get our 2025 power portfolio online. So that would energize about a gigawatt of power. So think about that as including the Rockdale hydro expansion, our Norway site, the 175 there, Bhutan, the full 500 in Jigmeling. It also included, though, the two Ohio sites, the 266 phase one in Clarington and 220 in Maslin, Ohio. So again, now both those sites, and I'm sure we'll get to this, we are targeting for HPC AI build outs. So should that happen, obviously those would be kind of pulled out of that CapEx bucket and kind of be put into a different one. So in some ways, this is kind of, I don't want to say the worst case, but this is really where, assuming we went all down that route, that would be what our budget would be. So added to that, the only thing that was incremental to that was the Fox Creek plant, power plant in Alberta that we just closed earlier this quarter. So that would add about another $90 million, and that would essentially get the full power plant portion of the project built. And then 2026, we would look to finish the data center. So trying to give kind of conservative guidance around our CapEx, infrastructure CapEx piece. Moving on to get to the ASIC side of the business, though, I want to clarify a few other things, though. So, obviously we did have a pretty large cash output in Q4, about $195 million worth of chips. That represents more than half of the total chips for the 35 exahash that we've already been given allocation from TSMC. The rest of that was actually has already been paid in Q1. So essentially the chips for that first 35 exahash have been paid for. Okay. In addition to that, we also noted a tape out of costs for our A3 miner. So we did actually do two separate tape outs during the quarter. That was paid for in the fourth quarter. It'll actually hit the P&L in Q1 though. So, we're ready for kind of a large one-time charge off in Q1. But again, that's already been fully funded. So, we feel like we're in a pretty good position from a liquidity standpoint to fund a lot of this. Obviously there would be some additional capital needed. And like you said, we've got the ATM, which we'll, use conservatively. The convertible bond market, we believe is still open to us. We're also looking into some straight debt type of options, for especially in the future when we start really scaling our ASIC business. We believe that's going to be a very financeable, business line, just given the, potential for prepayments, as well as just the, purchase order financing from, potentially some large customers in the future.
So just call we've hand over to Bryce, who wants to get into the Fox Creek acquisition. With regards to those customers who have ordered the new Sealminers, I'm assuming that their receipts can't be recorded yet until, I'm assuming, delivery of the mining machine itself. And so obviously that will bring in cash that you've already paid for the chips, and you're going to be obviously paying the production cost to put those chips into cases and then delivering to the customer itself. And so that will bring in a revenue stream once they're starting to be delivered, I suppose. Yeah.
That's exactly right. So we've collected about a 20% deposit on those rigs already. We'll collect the remaining 80% before delivery, in which we're looking to start delivering those at the end of this quarter through the second quarter. So obviously we'll be collecting the rest of that, and we'll look to start recognizing that revenue, likely in Q2, Q3. And that again is just for the 7 exahash that we pre-sold Does not assume we sell any more, which would be my next lever that we could pull from a funding standpoint. Is we could just sell more miners, right? So we've got that optionality to monetize those in the merchant market.
And with regards to the increased capacity at your sites that are coming online this year, let's take the HPC potential sites out of the equation, but the self-mining sites like Bhutan and a couple of other sites there where the increase at Rockdale, do you have sort of like sufficient cash to cover that, or will there be more needed from some of the levers that you've already explained?
So, like I said, the chips for all 35 exahash have been funded. So there'll be a little bit of additional CapEx for the manufacturing. The balance of it, the chip is about 70% of the cost. Somewhere in that neighborhood. So we'll have the rest of that, which can be offset by the sale of the 7 exahash. So we should be fairly well funded for the 35 that we've got in the pipeline right now.
Awesome.
That's great, Jeff. Thanks for all the clarity and detail there. The next segment here, we wanted to get into the Fox Creek acquisition. This one hits close to home for me, obviously being from Calgary, Alberta. It's located in Alberta, and I've seen firsthand just the abundance of natural gas and oil resources in that province. So I've got a few questions, but to kick off this portion, can you talk to us just about this full or truly vertically integrated strategy, as you now have the Sealminer platform along with your own power generation in the case of Fox Creek?
Yeah, no, absolutely. This really kind of completes the vertical integration chain here. We have everything from full upstream power production all the way down to the hardware. So true vertical integration, we think for the first time at real scale in the industry. So something we're pretty excited about. This project in general here, again, is something we're very excited about. It's just a kind of a tip of the cap to our data center and business development team. I had the chance to work with them on this project toward the end of it. And I mean, this was a competitive project. A lot of other folks were looking at this as well. But we're really excited about just being in Alberta. Just from the support from the local government there has been amazing. Just the weather up there is ideal for mining. And really just the abundance of natural resources. I mean, it's really crazy how much gas there is up there that has really no home. I think there's at least 10 or 12 gas wells and refineries within like a 25-mile radius of our project. So gas prices right now are under $2 per cubic foot. And even during the Ukraine crisis, when Henry Hub gas spiked to like over $10. Prices up there stayed below $4 US, I believe. So a very stable gas market and just a great place to be.
Yeah, it's interesting you bring that up. Alberta, for those of you who are unfamiliar, very similar to a Texas type environment or political climate. And we have an abundance of natural gas and oil. We just have no way to get it out to exporting markets. So it is a captive audience or captive market there for you, Jeff. Now, I looked in the investor deck. I did the conversion. It looks like the power rate works out to about 2 to 2.5 cents per kilowatt hour. So compared to any other miner in the industry, that's obviously a phenomenal rate. We just talked about the abundance of natural resources in this location. And I also heard you guys mention phase 1 of the Fox Creek. So what can we expect next? Are you going to be looking to acquire more properties like this, expanding the Fox Creek, or what do you see this kind of longer term?
Yeah, so going back to the power price, I mean, it could be even better than that, because not only does this site, what's so unique about it is that not only is it permitted for gas generation there for 100 megawatts, we also have a 100 megawatt grid interconnection, and that allows us to sell power back onto the grid. So look, I think there's going to be a lot of activity in Alberta in the near future. Some other miners will likely get up there and start powering behind the meter, but having that interconnection and the ability to sell power, similar to what we do in Texas, back onto the grid, we can sell power, 5-10% of the time, and it's possible we can offset that energy cost, down to close to zero. Now, not only that, the project is also going to be a zero, net carbon project. So there's a pretty active and liquid carbon credit market in Alberta. So we think there's some additional upside potential with carbon credits. So just that alone makes this a very attractive project. But past phase one, we have the ability, we've calculated to phase this up to potentially a gigawatt of power or more. I mean, there's just that much gas in the area. So, this is something that we can really expand on, and, could be a low cost production site for many, many years.
That's incredible. And just one more on the Fox Creek, then I'll pass it back to Anthony. I noticed you slated energization date in Q4 of 2026, but we also noticed the A4 was coming into production in Q4 of 2025. We were curious why you guys stated that you were going to fill this facility with the A3 as opposed to the A4 model.
Yeah, I've gotten this question a few times, and I'm glad you brought it up. So just to clarify, that was really just to be conservative. We're trying to give hash rate guidance out and be as conservative and potentially accurate as we can. So, I mean, 100 megawatts gets you about 9 exahash of Sealminer A3. I mean, with the A4, I mean, it becomes kind of a crazy number. You're looking at 12, 14 exahash for just 100 megawatts. So really just to be conservative, we would absolutely put the A4 up there once it's ready.
You've obviously highlighted the benefits of going through these tranches of seal miners, the A2, now the A3, and potentially the A4, which is, these numbers are slight. We're not seeing anything like this on the market at the moment, even in forecasting. You've also, one of your slides indicated how many billions potentially this market is over the next few years, and that Bitdeer can start getting a reasonable slice. I think you quoted 30%. Can you tell us sort of like how realistic that is? I mean, we know Bitmain do control, a significant amount of the market at the moment, and I'm assuming that as you guys are bringing out machines, I would imagine their R&D departments are working around the clock as well to try and keep up with what you're doing.
Yeah. So look, I think this is something that people are starting to really take notice of now. I mean, but prior to this, the ASIC market had been really underreported by the media and the sell side, simply because it's primarily private companies that are fairly opaque with reporting. So I don't think people give a lot of credit to how big a portion of the market this is. I mean, we're looking at we're projecting, along with others, somewhere in the $4 to $7 billion a year market over the next 4 to 5 years, which is substantial. So I mean, look, we put some numbers in there, I think, really just to kind of justify the size of this market, but in reality, we're not in this to be second best. I mean, we are in this to take the leadership position in the market. With our second tape out and second design of the A2, we're already right at the top of the efficiency curve, with 16.5 joules per terahash. A3, again, we've taped that design out, and we expect the results back later this month, or excuse me, later in March. After a few weeks of testing, we're very confident we're going to hit our efficiency targets of 11 to 12 at the miner level, and that would put us in the lead from an efficiency standpoint. And the A4, we think, is just where 2026 is where we think we can just really take over the dominant spot in the market. So we're excited. It's a very forward-looking story here, but it's starting to become much more of a current story once we get the A3 in production.
Just out of interest, with I mean, I know it's normal for, like, when a new model comes out, say from MicroBT or Bitmain, they get shared around the various public miners to test out before any orders. What have you been doing with regards to any of the Sealminer machines? Have you shared them with competitors to say, hey, this is a machine that's working as efficiently as other models on the market? And have you had any sort of like initial interest that way?
Yeah, no, we've had some feedback from end users so far, and there's definitely interest from a lot of the public companies as well. So we think the A3 is likely going to be the most commercial miner among some of the larger pubcos. So we're excited to get units in the hands of them once we have them ready.
Yeah. And just a question that just comes to me as we're talking about this now, and you're really highlighting the benefits that you're achieving going down this route there. And if you think about how the share price reacted in the latter part of 2024, would you suggest that was more towards what you're doing from a Sealminer perspective, or do you think potential HPC down the line was giving you a boost like it did to some of the other miners. I mean, at one point in time, you were the second largest market capitalization to Mara, so which was some doing considering where you were at the start of 2024.
Exactly. So yeah, no, I think it absolutely is. So if you kind of look at the progression from, call it the end of the summer, we had investors coming to us now asking us questions about, hey, what are you going to do with your power portfolio? What's going on with Ohio? We don't care about the Bitcoin business, and we definitely don't care about the ASIC business. Over the next couple of months, though, we really start to see that script flip. And I'd say by the end of the year, a lot of those same guys that were saying that in June and July were coming back and saying, okay, now we need to learn more about this ASIC business because we see this as a real opportunity. So, I think it was kind of Q4 where it really started to become real to investors. And, I think, obviously we've seen what's happened since then, but we think the fundamental story is really still intact. And we think it's a huge opportunity for us.
One final question before I let Bryce move into the HPC side. I mean, you've got a really ambitious target this year in terms of hash rate growth by the end of 2024. I believe it's getting close to 40. And the fact that you're building your own machines, that helps you get that way, no doubt about it. But is there anything that could potentially, stop you from achieving that target? It might be the case of, potential companies coming to you looking for HPC data, and which then switches your focus to that, or the market conditions. We've seen the Bitcoin price drop significantly in the last few days. Are there points that actually say we need to ease something going through? I mean, last year we had 4 or 5 miners with significant hash rate growth, and only a couple of them actually physically achieved that growth. We're in sort of like February still now, so we've still got another 10 months of the year. But potentially, are there any hurdles that you sort of like think we need to maybe check pace on a little bit of the growth target, or do you feel it's actually achievable with what you know at the moment?
Yeah, no. So look, so we talked about earlier, the chips portion of it is basically fully funded at this point. We just got the manufacturing left, so the rigs are there. From a power standpoint, I mean, look, we are not going to be in a power constrained situation for a long time. Right now, we've got spare capacity in Texas. We'll have that 100 megawatts of hydro capacity coming online. We've got some hosting that's rolling off. We've got the expansion in Norway that's nearly completed. That should be done by the end of the first half of this year. And then Bhutan is going to start to energize in the second half of the year. So right there, I mean, that's 600-700 megawatts of available capacity. That's more than enough to accommodate, you need 6 exahash per 100 megawatts. Is to accommodate the A2s. So we don't even, and that's not even getting into the sites that are considered for HPC and AI. So that assumes we don't even touch those Ohio sites. So look, we could change course, obviously, if we felt the market dynamics pointed more towards selling some more of those rigs. That's certainly something we can pivot to. But again, we have that optionality built into the business model right now, which is so key for us.
I seem to remember we had it on a previous podcast, Jeff. I think you even said it at some point. If the demand for these efficient mining machines really rapidly increased, and therefore we saw a real change in the price, like we saw in 2021, where my S19s were starting at $30 a terahash, and then companies were paying $100 a terahash, literally 4 or 5 months later, because they were scrambling for machines. If we saw something similar in 2025, maybe that could sort of like change your direction in terms of, well, let's sell some of these machines and make massive profits straight away, because you can continue the production line. You've got the technology, you've got the relationships with TSMC, and you're now got these relationships with the facilities that will build your production.
Yeah, no, you're exactly right. And so it just gives us such incredible optionality in our business model to be able to flip between those. Essentially, we'll be able to have a home for every miner that we ever build, whether it's in our own data centers or whether we're selling it to third parties. So whatever makes most sense from a market standpoint. Obviously we've got a lot of power coming online, so we don't want to have as much of that sitting idle. But look, if the economics are such that it makes sense to sell them, we're open to that.
Excellent, thank you.
Yeah, there's so much flexibility and optionality with this vertical integration, and you're really able to capture any point in the Bitcoin cycle as you talk about the hosting and some of those contracts as well. Now, I did want to flip over to Ohio, 570 megawatts. This is obviously a HPC AI opportunity. We've seen a ton of interest through the Stargate initiative, all the DeepSeek news, really just a focal point of the Trump administration right now in the United States. So, can you talk to us about kind of this facility, or sorry, this state, and the longer term kind of plans there for this HPC AI?
Yeah. So just to be clear, we are targeting the Clarington site for HPC AI. We're in conversations with a number of different counterparties right now. We are looking for a partner. We feel like, look, we think we're very good at building Bitcoin mining data centers. We think we're the best in the world at producing ASIC chips. But look, we've never built a tier 3 data center for a hyperscaler before, and frankly, don't know or think they would or should trust us to do our first one, on their dime. So, we are taking a little bit different approach and looking to work with a partner. So think about a partner that has expertise, technical expertise to build the data center, has relationships with hyperscalers, and also has a balance sheet to sort of align our interests. So there's a few folks that fit that profile that we're in meaningful discussions with right now, and we think that significantly reduces the execution risk of this, what is essentially a very could be a risky thing to do. So that's the direction we're going towards, and we're spending a lot of time on that right now, and we think we're close to finding that right partner.
In terms of bottleneck, I mean, we had Dan Roberts on a couple of weeks ago when Iron results came out, and they, like yourselves, growing the mining business, but also looking to utilize some of that power towards HPC and AI technology. He was suggesting that there's a significant gap in power that's required to deliver some of these challenges in 2025, 2026 onwards. So do you feel having those sites in Ohio puts you in a really good place when you look at the landscape at the moment of where availability is around the US to deliver these types of services?
Yeah, no, absolutely it does. And we think that thesis is still valid right now, the sort of the shortage of power. Obviously, we've had some news come out here that gave the market some scares on that, but we think everyone we've talked to, that's still the case. So yeah, we think we're very well positioned, with almost 800 megawatts inside of PJM in Ohio, and also our don't discount the site in Rockdale as well. We've seen definitely some interest there. I'd also add our Norway sites too. We've had some inbound interest in the Norway sites. EU is probably 12 months or so behind where we are here from an adoption standpoint. But all that does is just give us kind of a longer tail on the opportunity, because right now we're looking at a time to power of 25, 26 being kind of the relevancy period for us. That could be extended in Europe. So right now we're focused on the U.S. sites, but like I said, we've seen some interest in the Norway sites, and that's certainly something we would entertain.
Do you feel there's less red tape in maybe the European sites with regards to looking at HPC versus Bitcoin mining and the way they're looking at those two different type of business units?
Yeah, I mean, I think there's no question they would rather see HPC than more Bitcoin mining there. We've got great relationships in the jurisdictions that we operate in, the municipalities that we work with there. But I think a lot of people wouldn't mind seeing a state-of-the-art AI data center rather than Bitcoin mine. But so absolutely, we think the access to hydropower there, and Norway is very interconnected from a latency or a fiber standpoint as well. There's a lot of submerged cables into the UK and into the rest of the EU. Water's not a problem there, and certainly the weather is pretty favorable.
Yeah, I was fortunate to go to Sweden about 5 months ago and visit the Hive facilities up there. But on the way there, we passed the largest data center in Europe, which is the Meta data center just outside Bergen in Sweden, sorry, and that was 150 megawatts. So when we see these sites there, like the Ohio site, and yes, you're going to have additional energy to support the delivery of HPC. So when we say you're going to deliver, say, a 200 megawatt service in HPC, you'll need that supplementary energy to, maybe, 40, 50 megawatts on top of that to deliver it. 150 megawatts, the biggest in Europe at the moment. Some of these sites that we're looking at in the US seem to be, really, really large sites.
It's incredible to think about, but yeah, it's exciting.
It is exciting, and that's what we're all obviously waiting for in the retail community. We keep hearing about the demand, the excitement from these hyperscalers, and obviously looking for that next big contract. So just great to get some more insight on the vision there, Jeff. Now, this one actually came directly from a subscriber. It's the last one I have, Anthony, then I'll flip it back. Talking about, actually, you mentioned this earlier in the conversation. Bitdeer was very selective with the ATM process, issuing shares really at the perfect time in terms of share price. The question from the subscriber was, would we almost see the inverse of that and ever see share buybacks at these levels? And specifically, leveraging your Bitcoin hodl. I know with Bitdeer, you guys essentially just started that out, but would there be any type of price point where you'd look to sell Bitcoin and buy back shares?
Yeah, I mean, I don't know that the two have to be connected, but we would certainly look at it. We've done it before. I mean, we bought back shares, previously in smaller quantities now. But, look, we think our stock should be trading at much higher levels. We think the value and the fundamental story behind the business is much more valuable than this. And yeah, I mean, a share buyback is certainly not out of the question.
Great. Yeah. Thanks for adding some color there as well, Jeff. I wanted to give you the opportunity to close out the interview. I know we've covered a lot of ground here. Talk about maybe anything upcoming, catalyst strategy wise for 2025. And as always, we appreciate the time today.
Yeah, no, absolutely. So look, I think our catalysts have been pretty well defined here. On the ASIC side, we're looking forward to getting the Sealminer A3 chips back from TSMC. Like I said, we're confident in the efficiency is going to be in that 11 to 12 joule per terahash range. We should have that back in sometime next month, and hopefully get through testing shortly thereafter. We'll certainly get that out to the market. I think that'll be a huge catalyst for us. I think that'll really make the market believe, that we can take that technology leadership position, like we said we can. And on the HPC side, obviously, we think there's quite a few catalysts potentially coming up there. Look for us hopefully to finalize a partnership with a development partner, and that would sort of be the next step there. Obviously, we know the ASICs are coming. We'll announce once we start delivering those to third-party customers, hopefully starting in March and through the second quarter. And after that, we'll start plugging them into our own data centers. So a lot of action coming up here, and we're excited.
A lot of action, a lot of excitement. Let us know in the comment section below, you guys, how you're feeling about Bitdeer Technologies Group, if you're currently holding shares. If you have any additional questions for Jeff and the management team, thanks so much for watching. We'll see you back here tomorrow.